Hey, what's going on? Welcome to the Master Passive Income Show. My name is Dustin Heiner, and I'm here to help you get financial independence, quit that JOB, that just over broke job, by investing in real estate so you never ever have to work a job again. Today, I'm going to be talking all about interest rates and how the rising interest rates can actually be good for you as a real estate investor and how you can make lots of money when other people are panicking. All right, here we go.
Welcome to the Master Passive Income Podcast, where we talk about investing in real estate with a special focus on making enough money so you can quit your job and live the dream life. And now, here is your host, Dustin Heiner.
Hey, what's going on? I'm super blessed to have you here on the Master Passive Income Show with me. And honestly, coming and watching this on YouTube or listening to the podcast week in and week out, I just really love being able to help everybody to invest in real estate. And right now, I am seeing some great things in the real estate investing market and in the economy in general. In fact, let me say that this way. Not everybody's seeing it the way I am. Some people are pretty concerned about the prices of things, the interest rates, the inflation. Now, I'm not happy about inflation, but what I am excited about is, as a real estate investor, I am super excited about rising interest rates. Now, there's so many things to go over, but what I really want to do is to help you to understand that these rising interest rates are going to help you as a real estate investor, and you're going to be able to profit from these rising interest rates. Now, recently, the Fed has, maybe year or 2 years, they've been increasing the interest rate that they charge between banks. Now, the Federal Reserve rate, that is not a mortgage rate. That is just between banks. Like if banks borrowed it from another bank, that's the interest rate that they calculate, and that's what they have. Now, what they do when they set those interest rates, they don't necessarily say this is what the market is going to do, but it's always correlated, where if the Fed raises interest rates, you will always see the mortgage rates increase. Now, what's going on is the Fed has been increasing interest rates between banks. What's great for us is we are now seeing the interest rate at 8%. Now, when I say great for us, you might be thinking, well, Dustin, that's eating up all of our income. I'm like, yes. But let's get there. We're going to get there because I'm going to show you how these rising interest rates are going to help you and how you can capitalize on the rising interest rates. Now, when you're thinking about the interest rates being 8% right now, the mortgage rate right now is 8%. It can even be higher if it's an investment home. Well, the last time, let me look at the chart. The last time that it was 8%, where it is now, was in 2020. So 23 years ago, we had 8% interest rates. So a lot of people might be thinking, man, we have always had great interest rates, 2 and 3 and 4%. No, it hasn't been like that. In fact, for the history of the world, in fact, I'm looking at my chart, back in 1970, it was maybe 1965, 1970, it was 8% as well then, 7.5 to 8%. And then in the early 80s, the interest rate, the mortgage rate jumped as high as 17 to 18%. I remember my parents, when they bought a house, they were paying 17% interest on their home. My goodness, that seems crazy to us right now. But their mortgage payment was so huge, it ate up a lot of their money. But as interest rates went down over the years, they refinanced and they actually got lower interest rates. Their mortgage went down, which is a great thing for us as investors. Whether the market goes up, the market goes down, the market goes sideways, we make money because we invest in passive income in rental properties. If we buy one property that makes us money every single month, no matter what the interest rate is, we're going to be making, let's say, my suggestion is $250 a month in passive income. You will do well because if the market goes up, you're going to make more money. Market goes down, you're going to make more money. If the market goes sideways, you're going to make money. Now, if the interest rates keep going up, and I say if, but for me, it's almost a when. It's not an if, it's going to happen, but we have no clue if the rates are going to go up or the rates are going to go down. And recently, the reason why the interest rates have been going up is because since 2020, the inflation rate has been 8 and 9 and sometimes even 10%. That at least is what the government's telling us. And so 10% a year for 3 years, that's 30% inflation. I'm looking at the cost of everything. The bills are just piling up. Now, what the Federal Reserve wants to do is bring inflation back down, and they were doing this by increasing the interest rate. Now, what's interesting is they also even created this inflation. So the Federal Reserve created the inflation by printing trillions and trillions of dollars and putting it into the economy. So they created this inflation, and then they're trying to stop the inflation by adding interest rates. Now, in my opinion, back in 2008, when there was a crash, the real estate market crash, they call it the Great Recession, the Federal Reserve stopped a bigger crash, and not in a good way. So in 2008, things started crashing, and Federal Reserve started printing money. They called it quantitative easing. That quantitative easing is basically printing money, putting it into the money supply of the economy, and basically it went to banks, it went to stocks, it went into like these big companies, and we can see over the last few years that the economy has literally taken off, or at least what it looks like, it's gone up. And if you just put your money in a mutual fund, more than likely you made a lot of money over the last 2 or 3 years. That is because you didn't really make money. Your money is just expanded because they put more money into the system. They've printed trillions of dollars and pushed it into the system over the last, since 2008 they've been doing it, and they ramped it up right after COVID. My goodness, they just kept printing trillions and trillions and trillions of dollars. Now, what they're doing is because all this money inside the economy, and so it makes your money worth less. And what happens, let's say you would buy a loaf of bread for $1 back 5 years ago, well now it's $3 or $4, so it's multiplied how much it costs to actually buy the bread. Now what the Federal Reserve is trying to do is they're trying to bring it down where it's not going to continually inflate, and so interest rates are up. Now for you as a real estate investor, the reason why I'm excited and the way you should be excited for this next, maybe 5-10 years of real estate investing, I'm super pumped and super excited because we're going to be making so much money by investing in real estate. And you might be thinking, well, Dustin, why don't I just wait until interest rates come down? Well, here's the big thing. You don't know if they're going to come down. And if they do, they're probably not going to come down very much. But if they did, you could even just refinance the property. But here's what I'm thinking. I'm thinking the interest rates are going to continually go up. Now, if you bought one house that made you money in passive income at an 8% interest rate, well, you're going to be excited that you have this 8%, even though right now you might be thinking, well, goodness, 8% is not nearly as good as 3% that I could have got. Well, imagine when it gets to 12% or 15% interest rates, you're going to be glad you had an 8% interest rate, and you're going to be wishing you had that all the time. Plus, let's say, for instance, it did go down and you had a chance to refinance and get into a 3 or 4 or 5% interest rate, well, then you could refinance it. So we do not wait to buy real estate. We buy real estate and then we wait. Over time, prices go up. Over time, rents go up. Over time, our equity gets bigger because we pay down the mortgage. Actually, I take that back. Our tenants pay down the mortgage. And so what we're going to be doing is looking at the interest rates as a tool. It's just a tool. It really just helps us to know how we can buy a property and make sure we're making money in passive income. If you buy a property at 8% that makes you passive income, you will absolutely be making money every single month, even if the interest rates go up. If the interest rates go up even higher to 14%, well, you have that home locked in at an 8%. If the mortgage rate drops and then you are now at a 5%, you just refinance it and then have a lower payment and you make even more money. So we do not wait to buy real estate. We buy real estate and then wait. And what I'm seeing is I don't think the Federal Reserve is going to lower interest rates anytime soon. In fact, I heard them say something to the effect of they want to break the back of the real estate market. Like prices are so high, they're saying we want to break the back of that market to bring prices back down, which is another thing. Interest rates going up means prices must come back down. Let's say it this way. Let's say you had $2,000 to pay a month to pay for either rent or a mortgage. So a mortgage, you're buying a house. Rent, you're paying rent towards somebody else. Well, that $2,000, if you're going to buy a house at a 3% interest rate, you can buy a $500,000 house and still make those payments. But when it's 8%, that money only goes as far as like $200,000, maybe $250,000. So the people who had the money to actually buy properties and now have to get an 8% interest rate, they cannot pay the $500,000. That's why in the last 3 years, from 2020 to 2023, now 2024, prices have skyrocketed because people thought, I need to buy properties, and with that, or a place to live in, and with that, they kept bidding up the price of homes, ridiculous amount. But now they can't. They literally don't have the money. They don't qualify for the loan, which is great for us. Now, here's another great thing about interest rates going up. With interest rates going up for us as real estate investors, we don't pay the interest on our homes. In fact, we don't pay our taxes. We don't pay our mortgage. We don't pay our insurance. We don't pay for a property manager. We don't pay for repairs. We don't pay for any of that stuff. In fact, what we do is we account for all those expenses, and then we make sure that we can rent the property for more. My suggestion is $250 more than your expenses are. So let's say your expenses are a total of $1,000. You want to make sure you could rent it for $1,250. That difference at $250 is passive income in your pocket. Now, I've been investing since 2006, and all those properties I still own, and I will literally keep owning them until I give them to my kids in generational wealth. But a lot of those, I started at $250, and now they're like $500, $600, $700, or even $1,000 a month in passive income, and it's just over time, rents go up. Now, you might be thinking, and I get this a lot of time from lots of people, well, hey, Dustin, you actually invested in real estate, and with that investing in real estate, you saw the market crash in 2008. Didn't rents go down? Didn't the price of rent go down? I say, well, let's think about it. Well, first, the answer is no, they did not go down. If anything, they might have went down like 5%, from $1,000 to maybe $950 a month. So not a lot. I mean, it did maybe, but mine usually, all of mine personally stayed the same. But what happens, sadly, if the economy changes and there's problems in the economy and people start losing their jobs? Now, if they're renting, they might have to get to a smaller place and rent for less money. But now if they're buying, if they're homeowners, it's sad, but they're going to lose their homes. They're going to foreclose on their homes. And what happens then? The pool of demand, the pool of people that want to rent increases. That means our rental properties are looking so much better because there aren't many rentals. Now, here is another huge thing that you need to be thinking about. If you look in any major city, you'll probably see on Airbnb 10, 12, 14,000 Airbnb places for rent. In fact, we just did this over the weekend at the Wealth Builders Mastermind Summit. We were all talking about the opportunities in the market. A big opportunity is coming. So many people have turned their long-term rental properties into short-term rental properties. That's a big reason why rents went up, because there weren't as many. The supply was down on how many properties were available for long-term rent. Now, with the supply being down of the total long-term properties and short-term properties up, well, the demand is still there. The supply is lower. There's less homes to rent. And so you have a lot of people wanting a few properties. That's why prices went up. Now, here's the great thing. With us as real estate investors, I am super excited for you and for me that we are going to be entering the best time ever to invest in real estate. Think of all these thousands and thousands of Airbnb or short-term properties that people, that sadly, they probably, this Instagram star, this TikTok star, they bought 2 properties and make $5,000 a month. They quit their job. Well, I'm going to do that too. Countless people. I know so many people who literally bought a short-term property thinking that they're always going to have it rented for thousands and thousands of dollars and that the market's always going to be fantastic and everything's going to be perfect for the rest of their lives. Well, I was investing back in 2008. I remember in 2010, hotels were about to go bankrupt because nobody was traveling, nobody had money to spend on vacations. Well, what's going to happen to these people who bought Airbnb properties that cannot rent them long-term? They're going to sadly foreclose on the properties, which we as investors are going to get property on pennies on the dollar. It's going to be so inexpensive for these properties. I remember back in 2010, I didn't have enough money for all these properties that I could buy. Now I am super pumped and ready. Now I want you to also be ready too. When you think about surfing, I love surfing. You know, you're in the water, sitting on a board, waiting for a wave to come. That's where we're at right now. We're waiting for the wave of properties to come on the market and be a buyer's market. Well, here's a big thing I want you to put in your brain. If you're surfing in the ocean and you're going to try to catch this wave, you do not start paddling after the wave has already passed by you. You will miss the wave. You'll never be able to catch up to it. Instead, you start paddling right now. You start paddling before the wave gets you, so you have momentum. It picks you up and takes you down the wave, and you ride that wave all the way in. Same thing with real estate investing. You need to be learning how to invest. You need to actually be investing so that you can take advantage of these markets. Like right now, I am personally doing direct mail. I'm literally having a great company called REI Print Mail. Check the link in the description for REI Print Mail. They're fantastic. They actually do direct mail and they help me to get my properties off market. So I am actively sending out mailers to get properties right now. If you do not know how to invest, if you do not have money to invest, if you don't even have the business built to invest, when the wave comes, you might be able to catch it, a little bit of it, but it might pass you by. So you need to be learning now. So definitely get my free course. I have my real estate investing course. I'll literally give it for free. Text the word rental, RENTAL, to 33777. Or you can go to masterpassiveincome.com/free course. The link will be in the description. That was rental to 33777. But you need to be ready for when that wave comes so that you will be able to ride that wave all the way in. Now, another great thing, I love that I do not pay the interest on my properties. My mortgage, I don't pay the mortgage. I don't pay for the principal. So let's say you buy a house for $200,000. Well, I have companies that my students and myself work with for financing, and we could put as little as 5% down, 10% down. So let's say you bought a house for $200,000. Well, if you put 10% down, that would be $20,000 to buy the next house, and then your mortgage and your loan is $180,000 in principal because you bought down, you put the down payment, $20,000 of $200,000 is $180,000. From there, you're paying interest and you're paying off the rest of the principal for 30 plus years. The beautiful thing is we are not paying for that. We as landlords are not paying the mortgage. I'm not getting a job to pay for the interest. I'm not getting a job to pay for the principal. My tenants are paying for that. So with that $180,000 left over, that all comes from my tenants. All the interest, if it's 8%, I don't care because I'm still making money. Now, here's the big thing. A lot of people might be thinking, well, Dustin, prices are high, interest rates are high. What do? My payments are really, really high. Well, number one, we always find deals everywhere. In fact, one student at the Wealth Builders Mastermind Summit, he got 6 properties in 2 months. You'll probably be hearing an episode pretty soon about him. I interviewed him, and he shows how he bought 6 properties in 2 months, and he was in your shoes, like didn't ever invested before. But he learned how to invest, learned how to build the business, took one-on-one coaching with Charles, and now he literally has 6 properties. So it's absolutely amazing. You can do it too. So deals are everywhere. You do not wait to buy real estate, you buy real estate and wait. But here's the thing. Let's say interest rates are high and prices are still relatively high right now. You need to be investing right now. What we do is we put in very low offers and offers that are going to help us to make sure that we can buy the property and make passive income. So if you're going to buy a house for $150,000 and you're not going to make any money in passive income, like the expenses are too high, so you're not making money in passive income. And you guys can get my green light deal analyzer. The link should be in the description, but it literally gives you all the green lights, like 5 different criteria that we use in our businesses to make sure it's a good property. Well, let's say one of them is red, where its passive income is too low. If the passive income is too low, we lower the purchase price or our offer price. So they might be saying, I want $200,000 for the house. Well, I actually offer, let's say $148,000 because I want them to come down. If my max dollar is $178,000, I'm just making up these numbers. If my max dollar is $178,000 in order for me to make passive income on this property, then I need them to come down from $200,000 down to $178,000. Then I offer lower so that we can negotiate. I don't offer their asking price or more. I offer what I can to get them to negotiate on the way down. And I am so excited about what's going on in the economy. I'm actually going to be putting on an episode pretty soon. I see the market literally, not just real estate market, the economy is in some big trouble. If you see what's going on in the stock market right now, you see Google's literally dropped like 15% in like 2 days. Nvidia went all the way from $500 all the way down to $400. The markets are just tanking. They're going down. I've been blessed. I've been shorting the market since like March. I've been following a guy. He's been helping me with my stocks. Just like I help people with real estate, he helps me with my stocks, and I make money because he is an expert, just like my students make money because I'm the expert helping them. So we've been seeing that the market is now taking a big turn, and it's going to be actually very, very bad. One big thing you need to realize is that our government is actually $1.7 trillion in deficit. That means, let's say they take in $1 trillion, well, they're spending $2.7 trillion. If you make $1 trillion, but then you spend $2.7 trillion, then you're going $1.7 trillion into debt every single month. Now, here's a big, crazy thing. You need to be ready for this as an investor. The interest rate alone, or the interest payment alone that our government has to pay every single month or every single year is so tremendous that it almost dwarfs all the money that we take in just because the interest rates have gone up. Now our dollar is getting even worse and worse. So you need to have something tangible. I personally love investing in precious metals, in real estate, in guns and ammo. I'm investing in that stuff because those are tangible. And if you are ready as a real estate investor. If you've already started paddling before that wave comes, this is going to be the absolute best time to invest in real estate, because what you need to do, you need to make sure that your interest rates are paid for by the tenants. You need to make sure that you're making money in passive income. You also need to make sure that you are always having the business ran by somebody else, that it's a automatic business, so that you don't do any work, but other people do the work. And remember, we do not wait to buy real estate. We buy real estate and then wait. I'm super pumped for you to become a fantastic real estate investor, scaling to 10, 20, 30 plus properties, so you can be able to quit that JOB, that just so broke job, and become financially independent. And that is it for today. Go ahead and get my free real estate investing course. Text the word rental to 33777, RENTAL to 33777. You can also join my Real Estate Wealth Builders group coaching, get all my courses. All right, guys, we'll see you in the next show. See ya.